Right, good morning, afternoon, and very late evening for some of you. Thank you all for beaming into this webinar on revolutionizing the trade landscape. Specifically, we're going to look at digital trade payment obligations. This is a joint seminar between ITFA, which I'm the chair, Marco Polo, Trade IX, as run by and managed by Trade IX, and the law firm Sullivan, formerly Sullivan and Worcester. You can move to the next slide, please, Olivier. Thank you. So our three speakers today, I will introduce Compare This. I'll tell you a little bit about ITFA. I think most of you, or a lot of you are ITFA members, but some are not. So very quick background. Then Danny Cotti, who is the head of the Centre of Banking and Excellence at Trade IX, will speak about the payment commitment part of the Marco Polo platform. Andre Casterman, my fellow board member and the founder of Casterman Advisory, is going to tell you about a very exciting initiative in this area that we have going on within ITFA. And last but not least, of course, the very well-known Jeff Wynne, who is head of the London office at Sullivan, and who is, amongst many other things, he's contributed to a lot of initiatives in this area. For the purposes of this webinar, the co-chair of the drafting committee for the URDTT, the Uniform Rules for Digital Trade Transactions, the old URDT. And I think you'll probably tell us why there's an extra T has been added. If we go on to just a few words about housekeeping, thank you, Olivier. So this is being recorded. You'll be able to ask afterwards for a copy of the recording, and it will be sent to you in any event via email, along with all the slides that you will see. So you can ask questions as we go along or at the end. We'll have time at the end, but please use the Q&A function for that rather than chat. It helps us to organize things a little bit better. So if I can move to the next slide, thank you. So just a very quick word about ITFA, who we are. We celebrated our 20 years last year. We've grown from an association that 20 years ago had under 20 members to over 300 now. And initially we started in the area, the field of forfeiting. We still do that, of course, and we'll probably talk a little bit about what modern forfeiting is at some point during this webinar. But we've expanded massively since then to cover a lot of other areas, the whole really of trade finance, and specifically relevant for today as a very large fintech community that we have within ITFA, very ably chaired by Andre. But worth mentioning that we also have a very large insurance community, brokers, insurers, and users, of course, increasingly large number of law firms, but also very excitingly for us, and it works very well and ties in very well with what we're going to talk about today, a lot of institutional funders and asset managers, the NBFIs and non-bank financial investors that are a very important part of the landscape now. So just a little bit about what we've been doing around COVID during this period. Olivier, if you can move to the next slide. Thank you. So this webinar is not specifically about COVID, but of course one of the things that has happened, one of the phenomena that everyone I think has seen, is the focus on digitization. So everything we're going to talk about today actually started before COVID struck, and it's a good thing because some of these initiatives and some of the platforms that we're going to talk about have been some time coming. They've had to have a lot of buy-in and broad reach, and so that has taken time. Things are moving now very fast towards paperless trade, and one of the reasons for that, of course, is that little box that you see at the top, that business continuity, resilience, operational effectiveness, whatever you want to call it, is an important new priority. So that has become absolutely vital for banks and non-banks to ensure, and that is the reason why, of course, we've had this focus on digitization. It's a way of allowing people to work from home effectively, but it's a lot more powerful than that. We'll see how the network works, and COVID or no COVID, there's still every reason to move towards paperless trade. and towards digitization. Jeff will talk a little bit about it. Those of you who know me will know that my regular day job is as a lawyer, so I take a lot of interest in the various legal and regulatory changes that we need to bring about. What we find that's a little bit shameful as a lawyer is that actually the technology works very well and it exists, but the real problems are legal. And Jeff will, I'm sure, expand on that. So all of this leading to a rise in technology adoption. From the very simple, at the very beginning of the pandemic, we issued some very well received guidance on digital signatures. Some of those are exceedingly simple. It's just that they happen to be in digital form, and there are much more sophisticated solutions around. Sure, we'll touch on those as we go along. Okay, next slide, please, Olivier. Thank you. This will be the last slide from me. So Andre will really expand on this, but we see really the fintech initiatives that we've carried out as really as part of a continuum, a broad spectrum, trying to bring in the corporates, the originators, the obligors, with the banks. We've specifically said here trade originators, because increasingly these are not banks, they're non-bank originators, platforms themselves, destination platforms and so on. And finally, of course, investors. And I've mentioned the importance of the NBFI community to the whole market now. So bridging that are two of the initiatives that we have going on. One we'll talk about, the other one, the TFDI, the Trade Finance Distribution Initiative, is something that you can follow up on our website. The DNI we'll talk about in some detail. So the idea here is to really to bring to bridge all of these three in an easy and digital way. Let's start with our first speaker. So I'm very pleased to introduce Jeff Wynn. And Jeff, we can move on to your slides, please, Olivier. Thanks, and I'll hand over to you.
Sean, thank you very much. Thank you for the invitation, and I join you in saying good evening, good afternoon, good morning to those who are listening. My idea was in some ways to be the sort of the appetizer or just the lead-in as to where we stand as a matter of English law. And the great thing about English law is that and it's the law that is sort of internationally acceptable in so many places and for so many transactions. And what English law has shown is that it is flexible in both legislation that's passed and in judgments for the courts. And those have both shown an awareness of electronic developments. Indeed, pre-COVID, there were already statutes that had been amended to reflect the electronic world. So the good news is that electronic signatures are recognized under English law, but all sorts of different methods are permitted with a lot of flexibility and very little stricture around it. So for example, DocuSign is a good way of achieving the electronic signature. But we have not gone down the route that other countries in the EU, for example, have with EIDAS and requiring some sort of registered provider for digital signature. And going alongside that is the ability to satisfy the requirements for documents to be in writing in a number of different ways. Source codes, electronic documents, all of those will be recognized as being in writing for most purposes of English law, and certainly for the trade transactions that we're talking about. And that means that smart contracts, i.e. electronic contracts with click and agree, are recognized as binding obligations. And there's a recent case that demonstrated that somebody clicking and accept at the bottom, that was sufficient to bind. Now, as we come on to an important trade element, there are limitations. And there are limitations on electronic promissory notes and bills of exchange under the Bills of Exchange Act 1882 Yes, for those who've not seen it before, this is not a typo. The act, a very, very good act, was passed in 1882, but it required tangible delivery of a bill of exchange or a promissory note, and you couldn't do it electronically. And well, that's not surprising because they hadn't really thought about that in 1882. But we are looking at ways around it. As Sean may get a chance to say, there are also lobbying efforts to try and change the law for a relatively quick fix. And I think had it not been for COVID, this is one of the things that may well have been achieved with a statutory instrument that would have allowed this to happen. But on a never say die basis, working with ITFA, we have an electronic payment undertaking that produces a substantive equivalent to what would otherwise have been a promissory note or bill of exchange under the Bills of Exchange Act. And indeed, I'm sure some of the speakers that follow me will say, well, anyway, why do you need a promissory note? What's so important about that? Olivier, if we can look at the next slide. So this is an interesting point, is how do you cope with digital issues? Because technology moves faster than the law can change. And as I've said, English law can be flexible to a point, and court decisions supposedly interpreting English law can move the position forward with the times. But that's not always the case, as my comments about electronic bills of exchange demonstrates. And that's not just me saying it. That break was put on by some eminent senior lawyers and law officers who said, if you want to change this particular aspect, you do need legislation to do it. If you look around the globe, other legislations have tried and are trying to move forward in some areas. Singapore is looking at how to legislate for electronic trade. There are different states in the US who have moved different parts forward. For example, Delaware has a law about electronic promissory notes, but you can't do it under any law but Delaware law. So if this is a problem, what are the other legal solutions? What can you make work? And the answer is the big word, contracts. You can use terms and conditions that consortium members sign up to. And that means they are flexible in that you can have contracts that are executed using those terms that have been agreed by the members. But it binds only the members who have signed up to that contract. Unless, and I'll come to the point in a minute, we can have some other way, some other rules that we could make apply that could broaden how we can agree contracts. And of course, the advantage of being in the club, the members club, is that you can reach agreement between yourselves. As an example that I've given, that an electronic bill of lading is a document of title, but it's not a document of title under many legal systems. But as between the members who have agreed that, that would be the case. And what is interesting is that if only jurisdictions, England as well as many others, had adopted the Untitled model law on electronic records, I would not be talking about contractual solutions, but we'd be looking at another way. And we have one other way that I'd like to mention. If we can do the next slide, please, Olivia. Uniform rules for digital trade transactions. The extra T, Sean, is that we started off with digital trade, but decided that we couldn't actually create rules for trade, but we could create rules for transactions in trade. Is it going to be an innovation? Well, we've worked on it for about a year. That's quick by ICC standards. If this initiative can be fast-tracked, the national committees permit it, we will have rules. And these rules have been set out to apply to exclusively digital transactions. And that means the rules would apply to the sale and purchase of goods and services, payment for them, and confirmation of payment by a finance provider. And that last point is highly relevant to the discussions that my fellow speakers will take you through today. So these rules are looking at what would they do? Designed to be agnostic as to the system used. In other words, they are rules for the digital transaction, and they deal quite naturally with the use of electronic records. They define electronic records. They set out who is responsible for submitting an electronic record. They cover the liability of a party that submits an electronic record. And not unsurprisingly, it has mechanics for if there's data corruption or if there's a mismatch of data, that's dealt with. And you'll be pleased to know, because sometimes it's worth looking on the bright side of life, it also works out that if you have a matching data or a data match, that the obligation then becomes irrevocable. And the idea is that these rules can then be incorporated into a contract like other rules, UCP for letters of credit, and consequently that applying these rules to a payment obligation, you can assist in making transactions work digitally. Is it a good way forward? Well, I suppose the answer is those of us working on the rules would hope that it is, but ultimately it will be for the market to decide, and perhaps my fellow presenters as to whether these rules would help them. And I leave it to them to take us forward. Thank you.
Before we go on though, Jeff, I just wanted to ask you, are you disappointed? I guess as a lawyer, you wouldn't be. Are you disappointed though when you take your role as sort of statesman of the trade finance market, that actually we've had to resort to these sort of private contractual solutions, and we haven't had really the support from legislators that maybe we need? So you've mentioned one thing, what I call the big bang, the sort of the one thing that which if everyone followed would change the legal infrastructure, the legal landscape, really very significantly, the unsuited trial model law on electronic transferable records, which to date has only been adopted by one country, Bahrain, although Singapore is looking at that very intensively. In the UK, there's been actually a lot of opposition, maybe it's too strong a word, but there's been a lot of questioning as to whether that is the right approach. As you kindly said, we're doing a lot of work in the UK, and the UK legislature is thinking maybe of smaller changes in the areas that are of concern to us. But I mean, can we get to the same position with these private contractual approaches? We'll talk a lot more, Andre will talk about the EPU that we've created with your help within the Digital Negotiable Instruments Initiative. But do you think that that this is the better way to go, or can we be realistically, is it just as good to go down the contract route?
I'm disappointed, but not surprised that laws have not changed. And I think in some ways, many of the people listening, the old school trade finance bankers, the parties who liked paper, have resisted paper until COVID comes along. And then suddenly everybody says, oh, well, we should have been doing this digitally. Why didn't we do this ages ago? So that I think is, if you like, the background. Can you achieve all this by contract? Yes. Anything that you could do legally, and that's why I made the point on the bills of exchange, but where the law actually stops you, you can't do it. But with the exception of that, yes, we can do it by way of contract and not have to wait for the law to change. And as I say, the hope is, although there's resistance to the digital rules, that they will themselves allow contracts to work better. because that's the environment in which I think we are going to exist. Because you're right, and we borrowed from the institutional model law to create the rules. People didn't adopt it, and they're not going to. It's not top of the agenda. Little fixes will happen, but I think we are left with making the contracts work.
Yeah, I think you're right. If only because that's a good start, I think. But let me ask you another question, which is sort of going to set up our next two panelists, and that's the distinction between networks and the assets, call them crypto assets, that exist on the network. Now, that might sound like a sort of slightly abstruse or intellectual way of looking at things, but actually, it's quite critical to the way the whole market might develop, because the one good thing about paper, of course, is that it is very mobile. I mean, you put it in your pocket, or you send it in an envelope, which of course means that you have all the problems we currently have with human handling. But it is extremely mobile, very transferable. Is there a distinction that we should be making? Can we have crypto assets without a network?
Yes, yes, we can. In fact, the opening part, if you like, of what I said is that you can have digital assets. The problem you've got when you've created your digital asset, because we can do it paperless, that's what we said, is what do I do with it once I've got it digitally? How do I transfer it? And the natural way to transfer it, as I'm sure the two speakers to follow will say, is use a platform, use a secure method. And in fact, that's the point, is the method has to be secure. And as you will recall, as we talked about how to have the electronic payment undertaking, we created the legal framework for an electronic payment undertaking, and then said, what are we going to do with it? And that's the point that we finished up saying, well, that's fine, I can create it, and I no longer want it to exist in paper. What's the real danger is having the same asset that exists in paper and digitally at the same time. That's the real disaster. The consequence of that is it is probably safer to take your digitally created asset and put it into a secure way, a secure platform, a secure form where nobody else can do anything with it.
Yeah, absolutely. I mean, you're right. Security is going to be so critical. I mean, at the moment, the emphasis, as we've already said, is on limiting human intervention. But once things are on a platform, of course, they do need to be secure. Otherwise, we're going to be at risk of the world's greatest hack at some point in the future. I think that sets us up. Thank you, Jeff. That sets us up very nicely for Danny Cotti, who is going to, of course, who is one of the people responsible for maybe the most successful network currently in trade, Marco Polo. I'm going to talk about particularly one of the modules on there. But so give us an idea, Danny, of the network and how things fit within that. Pass on over to you. Danny, you'll need to come off.
Okay, thanks, Sean. Good afternoon, good evening, good morning, everybody. Today's trade transactions involve numerous players, documents and data elements that are involved based on document exchange via multiple isolated systems. We know all the instruments from LCs to commercial invoice, purchase orders, bills of exchange, etc., that are flowing through the trade solar system by couriers and PDFs in today's world, and are recorded in standalone legacy system and records that don't talk to each other. Many parties are involved, and as shown on this slide. So what can you do about it? Well, if you go to the next slide, we are all very familiar with letters of credit here on the left-hand side and open account transactions, where the letter of credit provides mitigation of risk, can be used also as a funding instrument. The bank provides the risk mitigation based on the processing and matching of paper documents. So it's a conditional payment, but it's slow, it's complex, and it's costly. On the other hand, you have open account, which is faster, simpler, low cost, but it doesn't provide a risk mitigation. It doesn't provide a payment assurance. The trade is based on the trust between the buyer and the supplier. Now, a digital solution that we promote on the Marco Polo network is payment commitment, which ticks all the boxes. It's fast, simple, low cost, mitigates risks, can be used as a funding instrument where a bank provides the risk mitigation based on exchange and matching of digital trade data to establish a conditional payment undertaking. Contractual engagements, as Jeff said before, are obviously what will drive the members and the Marco Polo network, and the same as rules as per the Marco Polo network specific rule book that we are in the process of developing to really cover the irrevocable payment obligations. If we go to the next slide, where we see a process flow of payment commitment, it can be a traditional four-corner model or what I'm showing here, a three-corner model. So either you have a bank of the buyer and the bank of the supplier, or in a digital space, you probably can deal only with one bank, and one bank can cover both buyer and supplier scenarios. So all parties need to be on the Marco Polo network in order to execute the transaction. The flow is very simple. The buyer uploads the PO and shipping information to the platform. It gets immediately replicated on the corner nodes of network, and everybody else who is permissioned to see can see that transaction and the data. So the seller then approves the purchase order, and therefore the buyer bank can issue a conditional irrevocable payment commitment, similar to a letter of credit. Once the shipment is done, the goods are prepared, the seller uploads the invoice to the Marco Polo platform. Then a matching takes place on the Marco Polo platform between the purchase order and the invoice, or shipping data that are being provided by a third-party provider. And as a result of that positive digital matching, the effective irrevocable payment commitment can then be issued by either the buyer's bank or by the bank that is in the three-corner model in the middle that serves both clients. The effective IPC, irrevocable payment commitment as we call it, is an irrevocable payment undertaking from the buyer's bank to make payment to the seller or the seller's banks when there is a four-corner model, based on the automated data matching on the Marco Polo platform and based on the rules of the Marco Polo rulebook. So if we go to the next page, then we'll see that this type of payment instrument has received a lot of interest in the marketplace. All the banks that are shown on here, or the corporates, or the partners have seen that this is a way where we can elegantly deal with the challenges that we have described and that Jeff has referred to earlier. So a quick introduction of us. We are founded in 2017. Marco Polo was founded then by a group of leading financial institutions, and TradeX and R3. We are now one of the largest and fastest growing distributed trade and working capital finance network in the world, a digital platform that allows the exchange of assets digitally in a secure way and in a direct way. So open and distributed network, leveraging cloud technologies, API technologies, and DLT technologies to facilitate trade and working capital finance solution that create a better customer experience, that are seamless data integration, while at the same time, they're reducing cost, time, and risk. And if you go to the next slide, then we see in summary the value proposition of the Marco Polo network and the payment commitment. So first of all, one network for multiple trade finance solutions. So it's truly multi-product and a multi-bank scenario. You connect once to connect to many. Our apps are also embedded into ERPs, which will provide automatic reconciliation at the client's end, which is one of the key differentiators that we have with the Marco Polo network. It works with your existing solutions. No need to change or integrate to various other external systems or build something or buy something. It's just an add-on and it connects. It connects modular applications and it can be customized. In fact, it can be customized to a level that nobody has actually experience with. In today's world, legacy systems are really rigid in terms of functionalities and in terms of program settings. In the Marco Polo network, a buyer or a seller or a bank can set up a program and set up the rules how to settle that program on a program basis. And then it gives access to distributed ledger technology. And that's an important aspect because it allows permissioned and secure access of data. The biggest problem that CFOs and treasurers have in today's world is data security and cybercrime. And the fact that the data can reside inside the firewall of the client's offices on the node and is only shared on a transaction basis with the parties that are involved in the transaction makes it super secure thanks to the core network of nodes, a real enterprise-grade DLT protocol. We are leveraging the PC module technology and functionality to also build other solutions. So for instance, we have a solution that we call Supplier Pay, which is an SME supplier-focused trade module offering data exchange and matching solutions, reconciliation, and payment services. And of course, gives the SMEs also access to various types of financing options. Supplier Pay integrates, is leveraging the virtual distributed Marco Polo network with the technology that we built for scale. We will announce this solution formally in Q3, and it will be a further step in providing fully digitized machine-to-machine trade finance capabilities for the industry. Sean, that was my summary.
Thank you, Danny. And I know from personal experience just how powerful Marco Polo network is and how potent it is. Just to get back a little bit to the subject of today's webinar, which is digital payment obligations. Here, of course, your crypto asset, if I can put it that way, is payment commitment. So this is something that exists. I think you've mentioned that it comes into being because of the rule book. Now, I said that might be a little bit of an abstract idea, because as Jeff has said, there's no point having, it's a bit like having a motor car without a motorway or without petrol. You can't do anything with it. You need the network that you provide. So however you create it, whether you use the instruments that Andre is going to talk about, which are independent and have an existence independently of the network, or they arise on the network, their success is very much dependent on that network. And given that trade is cross-border, what I wanted to ask you is, for this to work, and I mean, you've already shown us very convincingly the number of participants, the banks, and the interest that you have in the network. How to really revolutionize global trade or digitize it? How broadly based does the network need to be? Are you just talking about numbers of participants? Do you need to secure strategic countries? What else needs to happen to make it really work?
Yes, so in general, the more corporates and banks are using the network, you know, and the more volumes are pushed through the network, they define the success, right? But you need three ingredients to make this work, right? You need the tech, you need the products, and you need the users. In terms of the tech, to serve participants 24/7, 365 days a year, we are very much focusing on scalability and performance of our network. Performance is a journey, not a destination. It requires consistent investment. And we are building on Corda. Corda has been proven already in the wider financial services industry by the DTCC and Accenture to be able to handle the US equity market volumes, for instance. So in excess of hundreds of millions of transactions a day. So we do not have concerns about the viability of the Corda network. Then we have been working with Microsoft and Microsoft Azure to build a state-of-the-art in-house network management system that is hosted in the cloud, in the Azure cloud. There's nothing in the market like this today. Large-scale platform and node provisioning, tuning, I can bore you with lots of tech speak here, but it really works. And we are constantly updating and automating the hundreds of nodes that we will be managing. So we will be able to manage hundreds of new nodes in a day through these network management systems. And it has the resilience that the network can never go down entirely. Individual nodes can go down. We operate a 99.5% uptime in our service level agreements. So that's one of the benefits of a distributed system. They have no single point of failure, and as such are inherently super resilient. Centralized platforms, such as the ones that are currently used in the trade finance arena today, are a single point of failure. If the hub goes down, all the spokes die, and all the parties can't participate. So that's the tech. Now let me talk to the product. Now, well, you need relevant products with state-of-the-art user interfaces and rich functionalities. And we are building that. We are building that and have shown with multiple pilots that have been done around the world with our payment commitment module. And we are doing it on receivable finance, and we are doing it on supplier pay. And then ultimately you need users. You know, you can build the nicest thing in the world and you have nobody using it, there is no point. So the engagement around the world is crucial for our success. We are very proud to have engagements with banks and corporates in all continents, and will believe that the Marco Polo network will become successful. In addition, we have built incredible partnerships that bring also users to the platform. Partnerships such as with Accenture, Polestar, MasterCard, and Microsoft. So these are a long-winded answer to your question, but these are the success criteria we see, and we work on all of them with utmost focus, and we have made incredible progress and are very confident that this will be a success.
So, I mean, the question I was going to ask you is what are the challenges, but I see one of the questions that has come in here is very specific. And I think it maybe goes a little bit to what we were talking about earlier with Jeff and what the URDTT is trying to achieve. And the question is regarding payment commitment, when does seller ship paper documents to the buyer? And I think you'll have something to say about that. But the reason that this question is being asked is that this questioner, Bruno Figlioli, is from Brazil, and of course what he's saying here is that for customs clearance you do need to have paper documents. So how does a system like Marco Polo deal with that?
Well, that's a very good question. In this transformation to the digital age, we continue to work with physical documents that are requirements in certain countries. And I'm very well aware of the requirements in Brazil where you need the physical documents. The Marco Polo network is not dealing with the physical documents. It is dealing with the data elements of those documents. The documents can be handled either through existing electronic document provider, I'm thinking of Polo or Estox, or they can be continued to be shipped with courier services until we have found a solution to automate that aspect. Trade, especially global trade, is so complex and so diverse, you can't digitize everything in one go. So you have to do it step by step. And we see very much the Marco Polo network evolving in a way that it will have regional governance and it will have regional product development. It's an open network that we are building. So regional and local companies can come on our network and develop solutions to solve specific regional problems. So it is a journey as we go through that, but it is something that you have to start somewhere. We are starting it with payment commitment. We are starting it with receivable finance and with supplier pay without documents. Mm-hmm. And another point I would like to make is that this payment commitment module can be used for the traditional trade transaction where you have a 3-4 corner scenario, but it can be used also for other scenarios. It can be used just for document matching. It can be used for document matching with bills of exchange. We are working on various use cases for the shipping industry, where we are supporting the shipping industry with like bunker fuel scenarios, canal transit scenarios, or port call scenarios, where a payment obligation from a third party, usually a bank, is making the transaction much smoother. And Marco Polo helps to digitize those very manual processes at the moment. So we are on a journey of digitizing trade. We have, with the Marco Polo network, we have an incredible tool and opportunity to master this challenge and to, over time, onboard various use cases in all geographies, in all industries around the world.
Okay, so thank you, Dan. So it's a very flexible, multi-use platform at the moment, and I think you made a very important point that it can exist alongside paper. But as Jeff has mentioned, the ideal is that we would replace all paper and everything would exist digitally. I think what you said might answer another one of the questions that's been asked here by David Gustin, and this really goes to the whole commercial rationale of and your place in the in the commercial landscape. If I can use a source to pay network already connected to my supplier, which has procurement, AP automation, and early pay, why do I want to use Marco Polo? Give me 30 seconds sales elevator pitch.
Well, Marco Polo is a one-stop shop, whereas the current solution is really a tailored solution for those scenarios. In fact, I think the message we have for all B2B networks is they can connect to the Marco Polo network. They can leave the buyer-seller interaction on that network, and they can leverage the Marco Polo network to access funding and financing cheaper and faster. That's what we are hearing from our corporate customers. So for instance, many customers tell us that as per their analysis they have done internally, that the payment commitment will save them 30 to 40% of their costs as compared to an LC administration, an LC support scenario. Now, those are significant numbers that will have an impact. But like I said, we are an open network. We are working with anybody, and therefore we are open to work with B2B networks. We are open to work with individual corporates. We are open to work with systems that they have developed, because they don't have to change what they have today. They can just use that and connect to the Marco Polo network.
Okay, so I think what you're saying is a very powerful, and I think maybe this is the answer to the question. It's the power of the network is not just through the technology, but through the number of participants that we have. So anybody who has their own network will be limited to that network, however big it is. Here, what you're saying is we have access to numerous networks through this sort of filter almost. Thank you for that. Time is getting on. Thank you for all the interesting questions. I'll move on now to Andre Kasterman, if we could bring up his slides, please, who's going to tell us what we've been doing, tell you what we've been doing in ITFA on the DNI and what the DNI is, the Digital Negotiable Instruments Initiative. So, Andre.
Yes, indeed. Thank you, Sean, and thanks everyone for joining us tonight or this morning for our US friends. Indeed, we need to digitize trade finance in pieces. We can't digitize it all in one go. And discussions with our membership within ITFA, you know, we now have those 300 plus members with the whole American market. We identified the need to increase digitization in negotiable instruments, and negotiable instruments like bills of exchange or promissory notes are actually simpler than the letter of credit because they are unconditional. And the fact that they are unconditional makes it easier because there is no matching to be made. However, as Jeff said, there is a need for referring to the Bill of Exchange Act 1882 as per English law, which is the main one being used in this space. And there is a need for paper, which has been reconfirmed in the UK, in Singapore as well, identifying those negotiable instruments as the exception to digitization, so not yet accepted as an electronic original, because of the need for tangible delivery. And this is a research we have done with Jeff as part of this DNI initiative. And this is where we came up to the solution indeed to work on the basis of contract law before we managed to do the necessary lobbying and get a change in the law, which certainly will require not only months but a few years, I would expect. Hopefully faster than too many years. So what we're trying to achieve here is definitely help the market move to digital trade, take advantage of new technologies, DLT. Also, Danny talked about the importance of those new technologies. We didn't have those 10 years ago when we started trade digitization initiatives. Now we have it. It helps in some cases, depending on the use case. It's not a nirvana, doesn't help in all cases, but in this case, it does help. And the need we want to address is very specific. It's all about digitizing those payment undertakings that are irrevocable, but unconditional. So those negotiable instruments need to become paperless. I want to repeat what Jeff said in terms of making sure the original is natively digital and not existing in both paper and digital form. Otherwise, we're getting into a mess. You can't have two originals indeed. So this is what we want to introduce as a new scalable market practice, scalable because we want this to be interoperable with any other network. And I will come back on that. So definitely for the goal for the banks, for the originators, is to be different by being more digital. And we know not only incumbent large banks want this to happen, but also newcomers, new entrants in the market, in the SME financing market, want, of course, more security, more enforceability, and more digital tools. And of course, increasing the financing is where we want to get to. On the next slide, we identified within our network of Infa FinTech one fintech that is focusing on document digitization across multiple industries. So proven technology that is enabling original documents to be digitally native, but also to be negotiable, transferable, and enforceable, of course, referring to the applicable law in those various industries, but certainly trackable thanks to a DLT infrastructure, and that is what makes those transferable digitally, because you always know where who owns the original document, and I'll come back on the details in a few minutes. Interestingly, this piece of technology also delivers electronic documents that are human readable as well as machine processable. So we address the two needs. This is not about exchanging PDF documents here. It's definitely about making sure that those documents are both handled, can be read by humans and processed by machines. And this caters for integration into existing technologies. Also, I will cover that in one of the next few slides. Moving on the next slide, please. So, of course, we have seen, and ITFA as well has provided guidance with regards to electronic signatures. Electronic signatures definitely is the available tool already wrapped around some practices that Jeff outlined, as well as some regulation around eIDAS. So electronic signatures are definitely relevant today for the immediate needs, whether it's on paper, scanned paper originals, or on the digital originals I'm talking about now. However, the applying digital electronic signatures on scanned documents does not prove originality. It does not prove that this is the original document. It proves that there has been a valid electronic signature on that piece of content that could have been scanned, that could have been created electronically, but you can't prove that this is the only or that this is the original that you transfer to another party. And that is what is missing with when you just use digital signatures or electronic signatures. This is why with the DNI initiative, we are combining actually document technology based on a particular markup language and electronic signatures, as well as a DLT infrastructure, so that this electronic document is signed electronically, but also tracked along the whole life cycle in order to make sure we not only know the changes that have been applied in the past, but we know the current original and the current owner, and we can prove not only integrity and signature, but also the originality of the document. Moving on the next slide, we see that the process of this piece of this digital original is actually very similar to the process of paper. When you look at it, in order to use a piece of paper, you don't need to be connected to a platform. You just need to buy paper from a paper producer. So paper is quite interoperable. You can give it to another person. You can own it. You can secure it in a safe. And of course, with your handwritten signature, you can prove, and a stamp, you can prove this is an original. And actually, with this piece of technology that Enigio provides, called Trace Original, you see the logo there, you're going to get a file, and everyone can handle files these days. We exchange files every day via email, via WhatsApp, and that file is highly secure, highly structured, can be read by humans, can be read by machines, is digitally signed, is tracked with a DLT you see at the bottom of the the screen here. And that file can be secured within the bank's own infrastructure. So banks can, and other parties managing those bills of exchange, those negotiable instruments, corporates for sure as well, can actually secure that original, electronic original, within their own IT infrastructure, as if they would be owning a piece of paper. And then, as we'll see on the next slide, indeed, the existing platforms in the B2B space or in the corporate to bank space, whether we talk about e-banking or Swift File Act, which is in use by corporates, but certainly by banks around the world, or even blockchain consortiums that are highly specialized in interbank flows or corporate to bank flows or B2B flows, can integrate that piece of technology, because that piece of technology is just focusing on making sure the original document is digital and traceable across the industry. So it's a completely different mindset from the platform mindset. It's around making sure, a bit like electronic signatures, that you're not all required to be on the same e-invoicing platform or e-signing platform. And here for those digital originals is the same concept as digital signatures, but it's applied on digital originals. You're getting that file is the original, you can check it on a DLT, and you do not need to be connected to any common platform to make use of the original. So interoperability with existing systems, with existing channels or new channels is definitely the goal. And this is just the way, of course, the technology has been designed. And I'm sure this design is already replicated by other vendors. So it will be interesting to see how this concept evolves and is replicated by more vendors going forward. Moving on the next slide. So back to the legal challenge, we definitely have a legal challenge here, because we can't state that this piece of technology is compatible with the Bill of Exchange Act 1882. And that's right for the UK, it's right for the other countries. So what we focused on from a legal perspective, following the advice and guidance from Jeff as part of this D&I initiative, is to focus on the middle step here, which is to create an enforceable instrument under contract law. I think that was a conclusion from Jeff to one of Sean's question around should we wait for common law, for the law to evolve. We might be waiting a long time, too long for business. So going forward and digitizing such instruments, an electronic payment undertaking that is unconditional. We are not confused here with the Marco Polo model or the letter of credit. It's unconditional, but it's transferable electronically and only existing digitally, is the solution we brought forward in April 2020, and that is available based on legal template provided by Sullivan that Jeff developed. Of course, going forward, we want to change the law. We have an initiative around that so that we can integrate the same piece of technology within the existing Bill of Exchange Act, but that is something we are working on, but we don't control the timing. Also, so that's the evolution on the right-hand side. On the left-hand side, of course, that piece of technology for digital originals can be used for negotiable instruments, as EPU suggests under contract law, but also can be used for other trade documents, certainly for documents that are not platform specific and that need to be exchanged between platforms. And the interoperability objective is here high on the agenda for documents or data sets that need to get out of one platform and be transferred to another platform so that platforms become interoperable. It's a bit like the GSM protocol between the mobile operators, enabling interoperability between different islands. So the technology is not limited to negotiable instruments. It's also applying to other types of documents or data sets. So I think with this, if we can go to the next slide, I want to summarize, and we'll take your questions from here. We have tried with the team here to summarize and to highlight the main differences between those innovations. So certainly, as we heard already from Danny and Jeff around the URDTT and the irrevocable payment commitment that is operated on Marco Polo, we're talking about conditional payment obligations. Conditions mean there is to be a matching, a processing, whether it's automated or by people, but a matching of the conditions, checking that the condition is key in order to get to the irrevocability of the payment commitment. On the right-hand side, you see the DNI initiative, which is independent of the trade flow, unconditional, and which has its benefits. We're really talking about separate use cases, but I think with this, we're showing that we are very complementary in the approach, still very much focused on providing the industry with digital irrevocable undertakings, as you see at the bottom of the slide. Thanks for your questions, and I think maybe we can handle more of those in the next few minutes.
Yes, I'll open to questions. I was going to ask you, as you know, a question about interoperability, but I think actually one of the interesting questions that's been asked here maybe puts that in perspective. So the question here from Kantara Fujinuma is, what's the difference between Marco Polo and TSU BPO? So what I think, as Danny has said, is the inspiration for payment commitment on Marco Polo. What is the difference between the two? He says it's not a blockchain, but the concept was similar. It wasn't very successful, as you all know. I'll start with you, Andre, because I mean you were a big force behind BPO and extremely dynamic. And of course, it's not because of your lack of effort that it didn't happen. But what is it here? What of the three things that we have talked about? So the way the URDTT could operate, the payment commitments, and the DNI. Let's call it the EPU, because the DNI actually, as you quite rightly said, is broader than the EPU. But what is the difference between these? Is there really any difference? Is it the difference between just the legal envelope? Give me your opinion.
Well, if I would start, as you suggest, whether it's the one or the other solution, generically, it's all about a willingness on the bank side first. But then when I talk to banks, and I realize that the willingness of all is lacking on the corporate side. So if we assuming we have sufficient corporate demand for the one or the other solution, because obviously a conditional payment undertaking like BPO or the Marco Polo is far more complex to put in place than an unconditional one in terms of the use case, for instance. So, but despite the low complexity of some of those innovations, there must be a need for real demand from the market. And the corporate have a key role to play because unfortunately, in large organizations, large banks, large corporates, status quo is the norm. Maybe COVID will change that attitude, but I think the general issue we have as an industry is scaling the adoption of those. BPO has been implemented by 15 banks, but it's not representative of the market. Hopefully Marco Polo will be implemented by all those banks that successfully with many corporates as Danny presented. But I would send an important message to the corporate world to say those options are there, developed by us on the banking industry side, whether we're working for a vendor or for a bank, we're all the same party. We need the corporates to open up to those innovations. And usually I prefer to start working with smaller banks, with smaller platforms, new entrants, because they are more open to innovation than the incumbents who have much to lose and not much to gain from those innovations. But that's maybe my the experience I have had over the years that is becoming a bias. So I like the new entrants because they are more eager to innovate and try out new things.
Yeah, and I get. I mean that's right, isn't it? I mean, it's nobody produces any of these things in a vacuum. The idea is to do something that is useful, that will be taken up, which ultimately somebody will make some money, but that really has the backing of the users and the originators and the obligors. And it's interesting actually, you know, that to see, and you brought this to our attention recently, Andre, that the organization that's taken over the running of the BPO TSU actually on its website refers to incorporating this within URDTT contracts. So it's quite interesting that, you know, that they want to use it in that way, and I think they've seen the point there, haven't they? That it's a tool to be used. Danny, how important are corporates? I mean, are banks going to lead the wave, or are they? Or because I think one of the criticisms actually that I've heard of a lot of trade finance fintech is that it's very much bank led, and it's been developed sort of independently of what the customers want. One exception to that might be Congo, where actually essentially it's been taken over by the corporates. But how do you see this?
100% driven by corporates. That is our experience so far, and that is our approach. Yes, you need the banks to be part of it because the banks provide the liquidity and funding scenario. But the adoption will be driven 100% by corporates. I cannot disclose any names, but we are working with various corporates. We have a partnership with Accenture that is focusing 100% on corporate origination, and corporates will drive the way. They will ultimately have the benefits from these digital instruments, and we have to provide them a secure and legally tight scenario how we settle these trade and banking instruments.
Yeah, thank you. Let me see here at the questions that have come in. There's quite a technical one here about the recognition of the payment commitment as a financial asset under US GAAP. Is that have you been looking at? I mean, you spend a lot of time, I know, looking at the legal issues. Have you looked at the tax issues? If I were to warrant an answer to that or hazard an answer, I would say that it's not the substance. I think it goes a little bit to what we're saying about what fundamentally all these platforms and all these instruments are trying to do, is that it's trying to not revolutionize the world, but build a better world. From that point of view, tax treatment and accounting treatment shouldn't be any different.
We don't see, and that's also, again, the feedback we get from banks as well as from corporates, that payment commitment will be treated exactly the same way as letters of credit.
Yeah.
It's the same systems, the same processes, the same recording, the same reporting, exactly the same, because it fulfills the same action, just digitally.
Exactly. Jeff, do you have a view on that? You're a lawyer, not an accountant, but
exactly right. But I agree with what Danny said. I mean, the whole point about this is that we are simply creating in a digital world what would otherwise have existed in paper. So if the promise, had it existed in paper, was a financial asset, then the fact that it exists digitally should have the same result.
right, exactly. And I think that's both law, tax, accounting. That should be right. As I say, we're trying to build a better digital world, and not boil the ocean, and create something that has never been seen before. All right, we have gone over the hour. Thank you very much. I'm just going to see if there's one last question, maybe from Hugo Jimenez. I understand BPO is the main core of payment commitments. In the same line, lack of demand and high cost were the reasons that BPO came a cropper. What are you doing differently, Danny?
Well, you know, we all know BPO was a very bank-centric solution, right? And has not involved buyers and sellers, and has never been upgraded or updated in its lifetime. So we are offering a totally different scenario. We are offering reconciliation, payment services, financing, plus the data matching. BPO was only data matching. That was it. And I think that sums it up.
Exactly, thank you. Let me just finish and I'll answer this last question from Hasaki-san. What is the key for the new rulemaking for trade digitization when so many people are involved? ICC, SWIFT, central banks, existing regime being kept as the rulemaker. Let me just finish this off with a little plug for what we're doing in it for one of our latest groups, Technology Experts for Regulatory Action, that is looking at exactly these issues. We are working with partners, and you've mentioned some of them there in your question, Saki-san, to bring about the change. And it's interesting, you know, I've mentioned that the challenges are legal, but legal is a very broad and generic word here, because what you find in some countries is that you do need a change in the basic law, black letter law as it were. You need to go to a parliament or the equivalent. In other cases, actually, it's things like going to ministries to get directives and circulars issued, or simply to change practices. And we found quite a wide variety of different challenges on that on that point across the world. In the UK, as I've mentioned, we've gone at it on a small bang approach, very focused, targeted changes to very specific legislation. Other countries, we had an extremely interesting discussion with one of the government agencies in Singapore on this a week ago. They are going down the UNCITRAL model law route because they see that as being the key to regional adoption. So there are a lot of good people, for one of them, who are really fighting the fight on this. With that shameless plug for ITFA, thank you to Marco Polo, thank you to Sullivan, and thank you to all of you for having spent just over an hour with us. Thank you very much.
Thank you. Bye-bye.